Hello, wonderful people. This is your brother Prince Roxon. I am here this afternoon to do an in-depth analysis about, you know, financial statement of two banks. Now, this analysis would inform you to make a decision whether to buy shares or not. So I want you to follow me. Now, I am looking at the quarterly statement of these financial institutions. One is a telecommunication and one is a financial institution. Now, one of the things that makes the stock exchange very interesting is that per law, they are required to publish their statement quarterly. Why is it important? It is important because it makes you, the investor, makes an informed decision whether to invest or not to invest. You get to see the clear direction of where the company is going. And so I want to start with ETI, Ecobank Transaction Incorporation. Interesting enough, in the third quarter, revenue went up by 18%. So the revenue came to a standstill, came to a place of 1.75 billion US dollars. Now, they had a profit after tax. Profit after tax also went up by 33%. Now, this is a year to year analysis. Take note. Profit after tax rose up to 33%, thereby putting the figure at $454.5 million. Total assets that the company had rose up by 16%, and the value of their total assets is 32.4 billion US dollars. Equity also rose up by 39% to the figure of 2.5 billion US dollars. Now, loans also went up. Loans also went up. It means that previously there was a decline in terms of how people took loan, but there's been a rise in terms of loan percentage, 15% rise in loan. Now, you come to deposit. How many people deposited their money into the banks? Interesting enough, there was an increase of 18%, and this is very important. I want you to take note because drawing up to the banking cleanup sector, a lot of people had lost hope in the banks. And we saw that in terms of deposit, it began to decline because people never had faith in the banking industry. People prefer to put their monies in their momos. But for we to see an 18% increase in deposit tells you that that confidence that was lost in the past is regaining its part back. And that is a very good news to every banker, to every investor. It is a very good news. Number two things I want us to look at. I've looked at the revenue aspect. How does the company make money? We got to know that with ETI, most of their monies came through net income interest. It means that core banking business is strong and their net income went up by 21%. Their fees and charges, the fees and charges they charge you and I for transactions we do, went up by 15%, which is a good news. But this is where there is a concern. It is not only about the positives. There's a concern. It means that the concerns here is that impairment charges, that bad loans, went up by 38%. It means that customers are defaulting on loans. Credit is increasing, which is a very alarming situation I want you to take note of. It is going up. Customers are defaulting in their loans. They go to the bank loans them money, and they are not paying, they are defaulting. Today they pay, tomorrow they don't pay. 38% of that in payment charges. It's crazy. Now let's look at the profitability. Operating profit interest went up by 34%. Profit before tax went up by 33%. Earnings per share also went up by 35%. It shows a strong profitability improvement. That is what the data is telling us, that there's a strong profitability improvement in this arena. Now let's look at the balance sheet. ETI has a strong balance sheet, strong asset growth, total assets as earlier espoused, is 32.4 billion, 16% increase of their assets. Now, when it comes to loan growth, the loan growth was around 11.35 billion, 15% increase. Then we had deposit growth. I told you, deposit went up by 18%. So if deposit went up by 18%, deposit growth was at a value of 24.1 billion, 24.1 billion US dollars. That is where it got to. Now, it means that the customers trust the banks in order to put their monies there. That is why we see this. But there is a risk here, higher liability. And I told you about the liability. We have total liability of 29.9 billion US dollars. That is the total liability. And we have an equity of 2.5 billion US dollars. These are the equity. But there is also another risk I have to bring to your attention on ETI. One of the risks on ETI is that the currency risk, US dollars assets increase, while CD assets depreciate. We know that there's been a bit of stability within our CDs, and these figures are in dollars. So we see currency risk here, meaning exchange rate volatility is affecting the performance of this. I repeat it again. Exchange rate volatility is affecting performance. Now let's look at earning per shares. With earning per shares, we see equity rising up by 39% rise, which is very strong. Retained earnings improved. We saw that company is building value for shareholders. The cash flow and operations. It means that once there's a strong profit and people are depositing money, it suggests that there's a good cash flow, available. There's a good cash flow. Finally, you look at profitability. Profitability growth is strong. EPS growth is strong. Efficiency, expenses only rise by 4%. It tells you that even efficiency, they are doing very well in terms of managing their revenue, which went up by 18%. Then very efficient management. The risk here has to do with impairment charges, which increased by 39%. It means that people are not paying their loans, they are defaulting. What would be my investment decision for you? I've summarized all these things. I've given you the positive and I'm giving the negatives. Investment decision, buy ETI with caution. It is suitable for long-term investors. Buy gradually. Don't go in all. Monitor the situation. When you notice that in terms of their liability is reducing, then you buy gradually. Buy with a strategy. Buy with a strategy. God bless you. My next financial analysis I will do will be that of MTN. MTN. So this is up to you to make a financial decision on whether buying ETI or not buying ETI. But as I said, investment decision is buy with caution. It is suitable for long-term investors. But when you're buying, buy gradually. Don't go into all. Don't buy everything together. Buy gradually. God bless you. Click the like button, like, share, and follow. Thank you very much. This is the financial analyst, Prince Roxon.